Yo, what is going on, ladies and gentlemen? I'm not a financial advisor. This is not financial advice. If you ever want to watch my live streams and watch me trade in live time and just call a price in live time, make sure to click the WAP link description or WAP link in the description below. Um, Really best way to learn in live time. Okay, I know this hindsight stuff's good, but if you want to learn to ask me questions live time, make sure to join that. Okay, I will be probably raising my prices in a couple months, so Um, yeah, I would recommend doing that. All right, and then last thing, if you want to start a futures account, I talked about this in the video yesterday. Make sure you go to the Apex link. There's a 71% off sale right now. Just type in that code. In the Apex link in the description, there's a code. Type that in the discount code section when you buy an account. And again, that's a really good way and better way to practice on a demo that actually has some meaning, which could end up getting you a payout. Who knows? So go click that link. All right, so today's video, we will be going over inversions that have taken internal liquidity. Okay, so some people, they always ask me about these, like, what if there's an inversion and it looks good and it has taken internal liquidity? Okay, if we really look at an inversion model, okay, this is not going to be a really long video, but if we look at my inversion model and we go to model examples right here, I always say I don't like longing the one that has hit internal liquidity because the bias is not as concrete, and if you don't know the bias, well, then how do you know this is going to work? Okay, so that's my thoughts surrounding that. Okay, but I do like longing this black line because this black line I know internal liquidity has not hit. So with that being said, can you still technically take the dotted line route? Okay, can you technically still take this route? Yes, you can. But here's the thing. Whenever I do take that route, it has to be, you have to have a really, 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 really confident bias. Okay. For example, in this setup right here, look at right here. We have this 3-minute inversion. See how we hit that internal liquidity level right here, but it still works? Okay, that is okay. Now, if you really want to maintain your win rate, then don't take this. But if you don't care about your win rate and care more about RR, you can still take these if you're really confident in the buy. So like in this example here, we were inside of a 1 hour fair value gap, okay, and we were rejecting it, and we did get a nice reaction from it. And because of that, and knowing we are inside that 1 hour fair value gap, okay, then you know that, okay, if this is inverse, even if we hit internal liquidity, because of that 1 hour fair value gap being here, we should go lower. And that is an exception where, yes, you can take this even though we hit internal liquidity and keep going down. Okay, same thing with like this right here. Look at, we closed beneath this, but we also hit internal liquidity before ever getting a retracement. And if you see this and you're like, okay, this is definitely very bearish, and you want to market sell, but because of what I say and what I teach, you don't market sell because you're like, okay, well, we hit internal liquidity, why don't I market sell this? But let's say you're really confident in the bias, you know we're in that hourly fair value gap, you can still take this if you have a confident bias. Okay, that's the only way. And even with that confident bias, these are probably only going to have like a 70% win rate versus like a 90 with the other method, okay, without hitting that internal liquidity. So this is okay, but I think the biggest thing you should take away from this video is it has to be with a confident bias, meaning you have to have obvious equal highs, equal lows. You have to have obvious POI that you think we're going to go to, right? It has to be really obvious, because if you take it and if you take this short after inversing this and we hit internal liquidity, or you take this maybe, you will get destroyed if the bias is wrong. Okay, destroyed. And it's going to be destroyed. Like, we're going to have a giant green candle, and by the time it closes, you're down like 50 points of drawdown. So you have to be very careful this, but if you are confident the biases can work, okay, I will go over one more example. Let me just check from today. So like today, obviously, so I did take this example today, okay? This example is just a normal example. We did not hit this internal or these equal highs. But then look, I took it right here. Okay, this was my play. Stop was below the OB or closed beneath the inversion. It didn't matter. I took it like on this close, and my target was the equal highs. That was the play. And then we hit those equal highs and retrace all the way back into here. Now, same thing. For what I teach, is this something I'll usually take? No. But if your bias is very, very, very confident, we're going to go up to these highs or whatever it may be right here. Okay. Then can you still take this retracement? Yes, you can. Is the play technically over with? This play? Yes, but this is a whole new play. This is just a whole nother setup. So if you are having issues finding bias, do not take these. But if you are pretty good at finding bias, these retracements, even though we did 10 internal liquidity, will still work, although it only be like 60-70% of the time. And even if you are scared of taking this, just look for another inversion, like right here, see? So you got another inversion here. Okay, you can clearly see you could have just taken this again, okay? And that one didn't hit internal liquidity here. See how we retrace into this before hitting internal liquidity? So, like, you can just see it will still work if you are confident about the bias. At this point, I was not confident, so I wouldn't have taken that. But in the first example I showed, yes, I probably would have taken that. Okay, so it just really depends on, again, there could be a really bad trader who might be more confident bias than me. There could be a good trader that may not be confident in the bias. That just means they're not going to take this versus the bad trader might. Bad trader might win that trade. Who knows, you know? So it all just depends. You have to be obviously very precise about these, but that is basically how you take an inversion without having good bias. And the other thing is this. Stop losses. Sometimes I will loosen the stop loss if my bias is strong. This isn't really a good example right here, but let's say you're bullish here, and let's say you see, okay, this green candle closes above. Your stop loss, if you're really confident in the bias, it does not have to be closed below. It could be like, it could be this low right here, because if we go to that low, it's probably invalidated. Like, you can do these plays. For me and my win rate, I just like the more aggressive stop loss. So like if we did close below that, I'd just get stopped out there and not want to risk anymore. But again, if your bias is really confident, can you loosen up the stop, put a stop below low instead of like an inverse fair value gap and loosen the stop? Yes, you can, and you can just target right there. So these are two ways you can kind of do it different than how I teach it, which I understand some people still probably do. Just know that the win rate is probably going to definitely be a little lower, which is fine. It's not the end of the world. You'll still be profitable with this model, but probably higher RR. So let me know if you have any questions. If you do, just let me know in Discord. Again, Discord's free to join. Check the description. And yeah, other than that, peace out.